We are live. Hey everyone, Retire on Dividends here, and I have two very special guests. One special guest you've never seen on my channel. His name is Mike Khouw. You may recognize him from CNBC, Fast Money, Options Action, and he's here joining me with Jay Pestrichelli, CTO of YieldMax title. So Jay, why is Mike Khouw with us today? Did you have any breaking news for us?
Yes, breaking news. We are very excited here at YieldMax that Mike is joining us as the YieldMax strategist, and he'll be taking, really, I'd say, helping quite a bit, stepping in, helping with a lot of the, I'll say, spokesperson work that I was doing, discussion and transparency and education around YieldMax. So this is super exciting. And for those of you that don't know Mike, I'm going to give you a 2-second bio on him. Mike's got over 25 years of experience in the financial markets industry. He's recognized as one of the industry's leading voices in options trading and strategies. He's also the co-founder and chief strategist of OpenInterest.pro, which is a firm specializing in financial data analysis and strategy consulting. Former partner of Cantor Fitzgerald, former member of the Philadelphia Stock Exchange, former member of the American Stock Exchange, and the New York Mercantile Exchange. Mike's resume is extremely impressive. But as you said, most importantly, you'll recognize Mike as a long-time contributor on CNBC's Fast Money and Options Action. And we are just thrilled to have him on board and helping us get the message out about YieldMax.
All right. No, I appreciate that. Mike, I know Jay kind of gave your whole background, but anything else to add for those that maybe, live in a closet and aren't familiar with who you are?
I mean, I started in the options business in the 1990s. I was a floor-based options trader, market maker back when we still wrote trades on paper tickets, I'm embarrassed to admit. Didn't last for very long. We did manage to figure out electronics sooner or later, but yeah, the earliest tickets were stapled together. And as Jay mentioned, I've worked on several exchanges. We operated, our firm operated on all of the listed options exchanges back in those days. And I did some dispersion trading, and I've been on the buy side, run an actively managed ETF before, but I came across these guys. I'm just really excited about what they're doing. And I mean, frankly, the explosive growth that YieldMax is seeing. And I think it's just it's a great place, and I'm excited to be here.
Yeah, no, thank you for being here today. And the community appreciates you, again, at the end of Options Action, giving them the ticker MSTY. Again, that was a big deal. So I guess, the first question I have for you guys is, what does a YieldMax strategist do, right? Jay, is anything changing with you? What is Mike? Is Mike the new face? Is Mike the coming on interviews now with us, and you're leaving us, or what's the story?
Yeah, I'll start there and then let Mike tell you. So I'm not going anywhere, right? This is, look, quite frankly, and you had a lot to do with this, right? There is such demand from the community to hear about what's going on with YieldMax and to create more transparency and openness of really all of the products, right? We're over 50 funds now that are live, and you've all seen what we filed, right? There's a lot more coming down the pipe. So this is really just to help bring more capacity to the brand. Yeah, you're going to see a lot more of Mike and a lot less of Jay, but it doesn't mean I'm going anywhere. I'll get to work with Scott and the guys a little more in the background and actually executing the strategies and product development. But nope, I'm here. Definitely not going anywhere. You guys know YieldMax is my baby, so to speak. So happy to have Mike here to help with that. And look, quite frankly, I can't think of a better options professional to bring in and help us here. Like, Mike's background's amazing. We're just so excited that he's willing to be involved and to get the word out there. And so, Mike, when we were first talking, a little inside baseball, right? We were like, Mike, how could you help us? What do you think the right role is? And it was actually Mike's idea to have the strategist role, which is not just, a spokesperson, right? It's someone that's involved in the morning calls. He'll have the ability to see what's going on in our positions. He's going to see our order book. He's involved with the dividend discussions. Like, Mike's level will be with the exception of him pressing the trade button, everything else that I have exposure to. So Michael will have an in-depth view of what's happening with YieldMax. And while it is his first week, we don't expect to give him super hard questions yet. I have no doubt he'll be up to speed as soon as possible.
Appreciate that. So, Mike, why the change? Why? I guess join YieldMax.
I mean, for people who are watching this, it's probably self-evident, I would guess. This is basically the growth area. It's the most important thing that we're seeing. I think everybody knows that the pivot from conventional mutual funds to exchange-traded products has been ongoing for a long time. It got started right about the time I entered the business, actually, and it was kind of a dark corner, actually, of the market when I was first involved in it. Actually, my earliest job as an options market maker was making markets in the oil service index options, which was a cash-settled option that traded on the Philadelphia Stock Exchange. When you wanted some sort of unique market exposure back at that time, that was pretty much what you got. You would have something like an exchange-traded, cash-settled, and these things were pretty clunky. Now, of course, we're seeing rapid innovation, rapid democratization, and we're seeing huge, basically, adoption of options inside the ETF. And this is really new. If you take a look at the amount of assets that are managed, and then you compare that to the growth in the options industry generally that we have seen since, call it 2000, it's exponential growth in the options business, and yet it's still a relatively small corner of ETFs. I think that speaks to the growth opportunity. It just gives more people access to it. And frankly, because options expire, you want somebody like Jay and the team. Many cases, you want these people managing it. It's actually one of the reasons he probably needs to spend as much time as he does in front of the screens. And I don't mean TV screens. I'm talking about the trading screens. So,
Yeah.
I just think it's a natural thing. If I have any regrets, it's that I didn't get on the bandwagon sooner, frankly.
Okay, I appreciate that. No, and to follow up on that, again, I mentioned this earlier, right? So you brought up Misty on, live TV, right? We never even, at least I haven't heard YieldMax or, any of their funds mentioned. What is the sentiment on CNBC or, your coworkers on YieldMax or Misty in general? Is it still like they don't know what it is? Because that's what was, the reaction. I think her name was Melissa. She was like, she acted surprised.
Melissa Lee, the host. Yeah.
She acted surprised, right?
I lump my colleagues into two categories. My original colleagues, of course, are the people from the industry, traders, portfolio managers, people who are actually eyeball deep in this business and have been for a long time. Those are my true colleagues, people like Jay, frankly, and the other traders. Many of the people that are on the trading team that Jay oversees have backgrounds that are very similar to my own. If we didn't know each other 20 years ago, we certainly knew people in common. So the view of people who are on the inside of the business is very different from those who are only now becoming aware of it. So when you're looking at people who are on CNBC, many times you're not dealing with former prop traders, people who ran, bank desks and traded derivatives. And this isn't a flaw. In many cases, you have people who traded bonds that only traded stocks, didn't have any exposure to ETFs. Maybe they worked as a deep dive fundamental research analyst at a hedge fund, a job I've also held, by the way. But if that's all you've ever done, then these things are going to be completely new to you. But, one of the reasons that I got involved in the conversation about Misty was because one of my former colleagues, founder of Dash Financial, which many people will know as Dark Side. So this is a guy I've known for a long time. He's, a real innovator in the options business. The firm he founded probably represents 10% of the options flow that trades algorithmically on the street right now. So amongst that community, I think what YieldMax is doing is very well known by now. And that's actually how I even became aware of it, is because he brought it to my attention. Some people were asking me questions, and we started looking into it together. And very shortly thereafter, I spoke to Jay and Scott from Title and YieldMax and learned a lot more about what was going on there. Got even more excited than I was previously.
Oh, did you know Jay and Scott from historically? Obviously, they've been in the business. Well, Scott forever, right? Not the age of Scott, but you know.
Yeah, so knew of. So you know, Scott was, if memory serves, he was the DPM for Amazon.
He was
on the SIBO, and around, you know, I was in a similar role. So on the American Stock Exchange and the Philadelphia Stock Exchange, we don't refer to them as DPMs. We refer to them as specialists. I was a specialist. And so, you know, these names all rang a bell. And many times we were competitors with these people, right? Because I wanted the flow to come to the Amex. He wanted it to come to the SIBO. So, but it's actually a surprisingly small community. And eventually we all bump into each other, whether it's at an OIC conference or a SIBO conference or something like that. But if we didn't know each other, we had never met in person. We only met in person for the first time recently. We certainly knew of each other. So they may have known of me from CNBC, but I knew of them too.
Okay. Yeah. So before we get into maybe community questions, Jay or Mike, you know, in regards to this big announcement, was there anything else you wanted to add that maybe wasn't mentioned so far?
Yeah, this is the big news of the day, right? And actually, we've been working on this now, Mike. How long? Probably like 3 or 4 months to try to get through all of this.
Yeah.
It was even before you mentioned Misty on CNBC, of course, but it was. I look. This is to me really some of the best news for the community, for our investors, just to get more exposure and access and information. Right. I always say this around any option strategy, whether it's in an ETF wrapper or it's in an individual account. Not everybody understands what's going on. Of course, Mike looks at a portfolio and he knows exactly what's going on, but not everybody gets it. I know even Rod, you right out of the gate, like, you know, we had a couple conversations like, hey, it's okay sometimes if the call goes in the money. I still know you hate that. I know you hate it when the call goes in the money. But all of that conversation, like that's the dialogue we want to create. And so to me, this is in and of itself the best news that we can have. I think you'll start to see some new product news, right? Some more launches coming down the pipe. But today, there's nothing more important than this in my mind.
Definitely. It's definitely big news. So for the community, if you guys have any questions, now would be the time to bring them up. Obviously, start with the word question, and then post the question. And then Mike, question for you real quick. What is your favorite YieldMax fund? And you don't have to answer this, but is it Misty or you have a different fund that's your favorite?
Well, I am a Bitcoin bull. I have been. I'm on the record because on CNBC at the beginning of every year, they have the acronym challenge. The analysts are each asked to, give their top. It's limited to 6, unfortunately, ideas for the year. But that and gold have been on my list for each of the last couple of years. So, of course, Misty has a special place in my heart for that reason. But the truth is that I actually am probably more in favor of the fund-to-fund products, right? So, and that's not because I don't love the fact that there are single stock covered call strategies. And the reason I think that's important is because it allows investors to choose their own adventure. In the same way that, would we be that interested in the equity market if the only thing you could buy was SPY or triple Qs or diamonds? Obviously not. But the reason I like the fund-to-fund products a little bit better is because I think the learning curve for many people who don't trade options, aren't familiar with these strategies, remains steep. And it's probably better for their introduction to it to be one where they're not sitting there trying to figure out which stocks they're most in favor of. Is this one going to be a winner? Is that one going to be a winner? So I lean more towards the more inclusive funds that do that. And as people familiarize themselves with these strategies and with the underlying concepts, then they're going to be able to choose the individual funds that tailor their exposure the way they want it to be.
Okay. So the YieldMaxes, the LFGYs, the GPTYs.
Exactly.
Okay.
Yeah.
All right, Jay, this question is going to keep coming up, so we gotta just ask it. Salty, everyone's talking about it. Is there anything to announce? Is it coming out soon? If it is, are you able to announce a date, or what's going on with Salty?
Yeah, Salty's been what we call effective for quite some time, meaning we filed it. It's gone through the SEC review period of 75 days. It's gone through all the questioning and comment period from the regulator. So everything is kind of queued up for that. While I don't think there's been an official announcement of it. It is probably something you're going to see shortly. And it has to do with a lot of the popularity of Ulti right now, right? Ulti has definitely been the darling of the last month or so. I get why that's the case. The performance has been strong. The distribution rate is high. The weekly payout is just a lot of fun. I guess it's we've talked about the weekly payout thing, as I understand why it feels great, right? And so it's one of those things that we listen to the community and we change and we adopt it. So I think all of those things are a great reason why Salty should be launched. We'll probably have an announcement about that. Again, specifics, I don't have a date for you. Feels to me like it's definitely happening this month, but nothing specific to tell you just yet. More to come on that.
Okay. Here's a good question. I know Mike's title is YieldMax Strategist, but is his role exclusive to YieldMax, or will he strategize with other title clients?
Yeah, Mike is exclusively YieldMax Strategist, so in the YieldMax family, which is really where we have so much of the growth right now.
Okay. Question for Mike. I guess he knows a little bit about your background. Leave it to Max. Do you miss the Austin summer times? Any chance you move back from?
First of all, I want to say this. I love Austin as a city. I loved being in Texas. I loved Austin. The exceptions to that would have to be cedar fever, for those who are familiar. The non-native juniper trees that are there, they kick off some pretty awful pollen, and some pretty awful allergies come with it. The issue that I have is that my wife has spent most of her life in California. She thinks if it's over 72 degrees, it's hot outside. And I think the first year we were in Austin, we had 90 days in a row where it hit over 90 degrees. And the deal I had made with her was, if we go to Austin, you can pick the house. So I bought a house, never saw it. I closed on a house. First time I ever laid eyes on it, I already owned it. But I also told her that if you prefer to go back to California after 5 years, because our kids were going to be switching schools around that same time, then we could. So I would love to actually split my time. And there are other benefits to being in Texas rather than California. We don't provide tax advice, but let's just say that's part of the calculus if you're thinking about going to Texas from California. And I love the people there.
Nice. All right, Jay, you come back to Jersey so we can hang out, or what?
I don't want to go anywhere near you, pal. You're in trouble. I'm kidding.
Stand clear.
Yeah, man. No, it was great seeing you in New York last month. That was good to catch up again in person. And mock punch me in the face again and all good stuff.
I tried to get Scott too, but he's pretty tall.
I mean, he wasn't playing along so well, right?
No, he's a tough cookie.
No, I saw a question about Scott. Scott's not gone, right? Scott is still here, right? You just did something with Scott the other day, right? So Scott is absolutely still here. Look, this is we're just adding to our capacity, everybody. Like, you've heard Venuto say many, many times, look, this is the power of title. This is why a bigger shop can be helpful here, and this is just, we're adding to our bench strength. That's it, right? No one's going anywhere. So I'm not going anywhere. Scott's not going anywhere. Mike coming here just adds to our firepower.
Yeah, it's just really the position really didn't exist, right? Maybe you were essentially doing it, but again, you had so many caps right in the beginning. You're kind of releasing those caps,
sure,
spreading those caps around, right?
Yeah.
Not covered call strike caps, but
Yeah, multiple strikes on the cap, right? Yeah. No.
Yeah, scattered, right? So I think this is a pretty good question. When you first heard about YieldMax, were you ever skeptical? Obviously, you know about options, so you understand it. But a lot of people are skeptical. Were you skeptical at all when you first heard about it, Mike?
I had a former colleague criticize me because I'm always skeptical. Actually, I'm skeptical of everything. So when I skeptical? If somebody says, "Oh, we're releasing a new product," I always want to sort of start peeking under the hood, see what's going on before I pass judgment on it. But yeah, I mean, I have a natural skepticism about everything. I think that's healthy for a trader. I think it's healthy for an investor. But then you just have to do your homework and figure out whether the product is legit or not. And one of the reasons that Jay and Scott and I became introduced, this was because I had already rendered an opinion on it, and I started to talk about it. I was actually on a live stream, and I was being asked about the product by other people who were arguably skeptical about it, to render my opinion of what was going on. And one of the things I observed was that a lot of the questions seemed to stem from a misunderstanding or a misconception, arguably, about what the products were and how you should be thinking about, what makes an investment attractive to begin with. So my whole point in going into it was, look, these are total return investments, and they're total return investments that provide distributions. So you need to understand the first concept in any investment, whether it's this or anything else you might look at. You want to understand your total return. That's the first part. And the second part is that when you have instruments like these that pay significant distributions, it's even more important. It's very easy to figure out what buying NVIDIA looks like. You bought the stock, you held on to it, and you can just take a look at what it's worth at the end, because it's not paying you any distributions. Same thing with Berkshire Hathaway. But when you have something that pays big distributions, you really need to understand that dynamic. And that was the thing that I was talking about on that live stream. And so, yeah, I mean, after I did that homework and recognized what these things were, and also why certain things were happening. So I happen to have some familiarity with this because I have run actively managed ETFs. I am familiar with the 1940 Act. I know about diversification rules. And because of that, people who would look at the holdings within these funds and said, well, how come it doesn't hold the stock if it's a buy rate? I already understood that, because when I had first looked at this, I recognized, well, you can't have all, you can't take in $1 billion, buy $1 billion worth of stock and sell calls against it and issue an ETF. That's actually not compliant. So you have to do other things, which they are doing. And because of that, I felt like I don't mind explaining this to people, because I think people need to know. That's almost a public service. So that's kind of my take on it.
So speaking of how you're going to do that, obviously, I think probably that Jay has been doing many interviews, mainly on YouTube, right? Do you plan to do the same thing, or do you plan to get the outreach maybe elsewhere in a different public matter to get the education out there? Obviously, I know you're going to be more involved than just the interviews, but is there any plan on how, I guess, you will get the word out education-wise and who you'll talk to?
Yeah, I mean, I intend to do everything that Jay was doing if and when I'm needed to do that, and more so if possible. I mean, if anything, the problem for Jay probably is that he's got a couple hats to wear here, and it's difficult to both trade and talk to everybody about what you're trading at the same time. So a lot of times it's got to be one or the other. So, my hope is that if and when and where people have questions and I'm available to answer them, I'll be doing that. And in between, I hope that, I'll be working with the rest of the team, just making sure that we have the messaging right and just talking about evolution and strategy and things like that, so that it just, constantly innovating, constantly improving. And I think, those are sort of the two pillars of my responsibilities as I see them, which is, helping the trading team and investment team wherever I can. And the rest of the time trying to educate and inform investors.
Now, I'm glad this question came up, because I'm not sure if it's necessarily a title fund or not, but I thought 3X is no longer allowed and Defiance filed for a 3x. What's it called? Wild fund. Did you guys hear about that? Are they allowing 3x funds again?
All right, so so this one here that we're talking about, the 3up one down, was under a brand LevMax, right, which was kind of adjacent to YieldMax, but it was kind of a cap, right? It was like a stock repair structure where you're long and synthetic, then long 2 calls, short 3 calls above, right? Like that kind of a deal. So it's still capped 3x up to this. So not too much more we can really talk about that. There is a prospectus out there on that. And then Defiance did file, but it wasn't a single stock, right? It was a basket, right? And when you start to do the basket, the 2x, 3x thing has to do more with performance on down days and what's known as kind of a VAR calculation, value at risk work. I think it's probably at this point way too early to even comment about anything there on what's been filed. So let's let those run through their normal process, and maybe more to come on those things down the road. Okay. So not a great answer. Apologize, but I can't really say too much about it unless you want to go read the filings, which I know some people like to do, especially Max Convexity likes to read.
Yeah, he read it last night. I saw
Hey, Max, by the way, how are you?
Speaking of someone else, Ambassador of Quan, I better ask his question. Question for Mike. Coming to YieldMax with outside eyes, what's one thing you're going to focus on first, and one thing you would like to see changed? And welcome.
Well, I think it's a little premature for me to start talking about this being, I think, my first official day. That would be quite the role for me to come in and say, all right, here's what I'd like to change when you have an enterprise that has been as successful as these guys have been doing what they're doing. I think it's funny because when this first hit, I saw a couple posts coming back to me that suggested that there are things that certain investors think that they want, and they think that these are objectives, and I'm not sure that I entirely agree. I'll give you an example. I saw a number of messages: do something about, quote, NAV erosion, unquote. And as soon as I saw that, I thought, okay, I do need to do something, but it's probably not what you think it is. What I need to do is have a conversation with anybody who uses that term as a pejorative, rather than just taking a look at what I was talking about earlier, which is the total return, right? And I was on an earlier call today. We were talking about this exact same issue, and I said, for most investors, we view returns of our investment to us as a risk reduction. In other words, if I loan you money for a year and you pay me a little of it every day, that's less risky than if I wait the whole year to get it back. And I care about the return of my capital, and I care about the return on my capital. Those are the two things that should matter to investors most. Return of your capital, in other words, I don't want my principal to be at risk, and the return on my capital. How much do I get for having taken that risk? And people who focus on something like NAV erosion, as they're calling it, I think they need to sort of reset their expectations and understanding. And so, I don't think that there's anything that I walked in and said, okay, here are the things we've got to change. It's not my place to do that, and I'm not well enough informed on some of the other things to even make that comment. But I can definitely see that some investor education is needed, and that's the first thing I hope I can provide.
Jay won't get offended, though. You can say something, right?
I've taken a lot of lumps, Mike. I appreciate Ambassador's question. Always the intellectual question.
So here's another Jonathan Kwan question. What active fund did you actively manage, if any, and is it still active, and how successful was it for Mike?
So I've been involved with a couple different funds. So I used to work at, I'll start with my first buy side role. So a little bit of level setting for people who want to think about the way Wall Street is basically set up. We have sell side and we have buy side. And then we sort of have this hybrid sort of proprietary trading role. So my first role was technically sell side because we were a dealer, but we were prop traders. So we were essentially managing a limited partnerships pool of capital, and then essentially affecting a volatility arbitrage strategy with market making operation, basically supporting all of the order flow that helped make that happen. So think about Citadel before there was a Citadel. That's what we were doing. So competed with Cooper Neff and Susquehanna and people like that. And I went from there to a hedge fund called Ivory Capital. Ivory Capital was New York based originally, then Los Angeles. Ultimately managed about $5 billion, long, short, equity, options, and high yield, primarily with a deep dive fundamental approach. And then more recently, I ran a fund that was long only equity, but was using options analysis to establish what stocks we were buying into catalysts like earnings. That ran, that is now closed, but it ran in 23 and 24. And I think over that period, we outperformed the S&P, it was by a nominal amount, but maybe about 1% or so. And, we were only dealing with the top 250 names in the S&P. So that it kind of limits how much out or underperformance. I mean, some people would probably looked at that and said, you're a closet indexer. We weren't. We actually traded very actively, and we went into earnings. Anybody who saw FedEx when they really had that horrible disappointment several years ago in the back half of the year, I had an outsized position in that, and that was not closet indexing. But yeah, so that was the most recent one. And so we wrapped that up. The ETF business, I will say this, and this is one of the other reasons I have so much appreciation for the title team. I actually made this comment on a call earlier, is that had I teamed up with these guys sooner, I probably could have avoided a lot of the business and operational pitfalls of ETF operations early on. It's non-trivial. It's a heavily regulated space. It's expensive to have everything you need in place. And it's a business that benefits materially from scale. And we didn't have the scale when I was running that actively managed ETF before, which meant that we essentially had to absorb all of that expense, all of that operation, all of that compliance, as well as do our day-to-day jobs of trying to pick and trade securities. This isn't a problem that YieldMax and Title have because now they have the scale. I'm sure they had some real growing pains that I didn't get to witness. But
just a few. Just a few, I'm sure. I've been down that road and not as successfully. So I can say with a certain amount of confidence that you must have it together to get this far in this business.
This quick, right?
Yeah, for sure. It's not easy.
So, Jay, there's a few questions on what Salty is. Again, back to Salty. From what I heard, I just want to clarify, it's not necessarily an exact inverse of what you're doing in Ulti, right? It's another fund. I guess you're going to short funds, I guess, or underlyings that you may think could be going down. It's not the exact same funds that are in Ulti. It's basically managed completely separate. Is that correct for the Salty fund?
Yeah, the prospectus, it says, right, we are either short or synthetically short a basket of 15 to 30 stocks. It doesn't say that it'll be the exact same ones that are in Ulti. I think you should just assume we're going to use a similar mentality of volatility first, right? So finding high vol stocks and then implementing the tactic over that. Sometimes, right, that could be the same stock around earnings, right? Why not? Why not be on both sides of it? I don't know which way an earnings pop is going to go. So because there's vol, we're able to take, put that in either fund. And then there's other times where, we all know the reason that, Ulti can have performance is because your underlyings have some appreciation, right? So you're going to want to pick stocks that have the chance for decline in price, right? That'll be constructive for the portfolio. So, I think that the prospectus gives us a lot of flexibility there. I won't tell you exactly how we're going to manage it until we're managing it. And then I'm sure we're going to have a ton of content on it. It is different managing a short portfolio than a long portfolio. So there's just a comment outside of YieldMax. Just, there's things that happen in a short portfolio that don't happen in a long portfolio, right? When you're long stock and it goes up, your buying power stays the same in your account value just goes up. But when you're short stock and the stock goes down, not only do you have appreciation, but you then get buying power released. And typically you want to add to your position, right? You short more in a short portfolio to keep the right amount of exposure, right? So it's one of those things that the trading will definitely have a different component to it. There's things like hard to borrow considerations on short stock, right? Those are things we're going to have to offset. Obviously, with options, there's the benefit of synthetic shorts where you get paid the cost to carry, but there might be a hard to borrow consideration. Like, it will be a more complicated fund than Ulti from an execution perspective. I think from an investment perspective, you should consider, very similar mentality, just, bear picks instead of bull picks. Okay, same cool. About income too, right? Going for income first, of course, is always the yield.
Weekly, I'm sure, right?
Yeah, I would assume that.
Okay, so question for either one of you. End of year, who has more assets under management, Ulti or Misty?
Yeah, I'll take that one, Mike, because you probably have seen a lot of the comments. I mean,
well,
I was just
looking at the billion. First... Misty's 5.6, around, I don't know, to give you context, I think.
Yeah. And I would say in the last month, Ulti's up $1 billion and Misty's flat, right? So there's definitely momentum on the Ulti side of things. Look, it's funny. I saw a lot of comments like fix Misty. It's like, all right, guys, give me a break, right? Like MicroStrategy's down, like it's so Misty's down, but less, by the way. Nothing's broken there. It's exactly what to expect.
It's just cruising.
Yeah, it's fine, right? It's okay. I don't think it's broken, so I'm sure we'll get some more comments on that. But look, I think it's hard to guess where the momentum is going to go. Feels like Ulti right now, but I don't know.
Yeah.
I mean, you had asked the question where my preference in the YieldMax product suite lies, and it is in these more diversified products ultimately. But one thing, I mean, also I saw some messages about that too. Fix Misty, fix this. Don't speak to us. You gotta call Michael Saylor. The issue that you have there is not a strategy issue, and these are strategies. If a stock goes down, the stock goes down, and these are single stock strategies, so they're going to track that. If a stock loses 50% of its value, a covered call strategy in that stock is also going to lose value. Maybe not quite as much, because you will have collected a little bit of call premium, but its performance is going to be very close to that, right? So, when people look at these, it's funny because they tend, at least some of the feedback I've seen, is that people tend to have the same expectations from them that they have about a diversified fund, as well as the benefits of the individual stock. Well, you can't have both, right? It's going to be one or the other. These things are going to track the performance of the underlying stock. We want these stocks to at least trade sideways if they can, and hopefully they go higher. If they do, we benefit from being long delta because we own the underlying, or we have a proxy for it, I should say, in synthetic stock. And you're looking to collect the decay. That's the game. And when a stock doesn't do well, whether it's Moderna, whether it's MicroStrategy, what's going on in the vaccine business, that's on Moderna. If you don't like Moderna and you don't like their business model, then you don't want to have a covered call strategy in it. If you think that it's bottoming out and you think it looks like a good value, then that's when a strategy like this is going to begin to make some sense. The more diversified products in the suite, obviously you don't have to make that kind of judgment, but it's good that the flexibility is there for those who want to.
Do you talk about Michael Saylor and MSTR? Do you have an opinion on the implied volatility on MSTR and why it's kind of plateaued in the 50% range? And do you think it's anything particular holding it back from getting back to what we're used to, almost the 100?
I think there's a couple of things that are going on. First of all, is the volatility of Bitcoin itself. MicroStrategy is a somewhat, it used to be a highly levered play on Bitcoin, but Mike, it's interesting because Michael Saylor is also a vol seller, right? So the way to think about what MicroStrategy is as an investment vehicle And this gets a little bit wonky, but effectively what he recognized was that he could harvest yield by selling vol. And the way he did that at first was, if you think about those zeros that he issued initially, those convertible bonds that he was able to issue at 0% that had a strike that was 50% out of the money, what he was taking advantage of was the fact that there was a lot of volatility in Bitcoin. He could sell that. He could then purchase more Bitcoin with it. And essentially what he was doing was issuing bonds by selling vol, because they were converts. So he was basically selling covered calls, and then using those proceeds to purchase more Bitcoin. He and the shareholders of MicroStrategy synthetically got long call spreads. That's effectively what that amounted to. So they were giving away the upside beyond 50% to the convert holder in exchange for getting the money to buy more Bitcoin and get the first 50% of appreciation. It was really creative. And I when I first saw that, I thought, boy, there's going to be a rash of activity of people trying to jump on this bandwagon. I was surprised that it didn't happen more quickly, but I think that some people didn't really understand what he was doing there. But the thing is that when the underlying asset, in this case, Bitcoin, and then ultimately MicroStrategy, the more mature these assets become, the pattern in terms of vol is that it tends to stabilize. Take a look at any IPO. I did a study where I looked at all of the IPOs from 1998 onwards, and I did that just as Facebook IPO was coming out, because what I wanted to do was create a prediction for the volatility behavior of Facebook stock after the IPO. Because if you're going to start making markets in an option, you're starting from nowhere, right? So you have to say, well, perhaps it will follow earlier patterns for similar assets. And the same thing is true here. The more adoption you have, the more mature an asset becomes, generally the more stable its price becomes. That doesn't necessarily mean that it's a bad idea to sell vol on it. I've seen people do studies that said the best time to sell vol in the S&P is when the VIX is at 10, because people get so panicky about selling cheap options that you'll see, the realized volatility will go down to 6 or 7. So you're actually getting huge amounts of excess volatility risk premium, even though the absolute level of volatility isn't that high. I didn't mean to take it down this deep rabbit hole, but I hope that helps a little.
No, that's good. We need to hear that question. That topic comes up a lot. And I guess this is kind of a question for both, obviously, hiring Mike. Mike maybe has contacts in the media space. So Jay, is there a plan to promote YieldMax funds in the media now, on TV? Are we going to see YieldMax commercials, or is it just
that'd be pretty cool? We could get you in a spot there, dude.
I'll be on a
commercial. But I think there's so look, there is marketing against this, right? You guys have heard Venuto talk about this, right? You've seen Josh, for example, right, come on and help us with spokesperson, or I should say brand management work. Obviously, Mike is here now. I think I haven't seen any plans for any commercials yet, but I do think that getting the word out is always important when you're in business. So I think you'll see probably a little more. But I'm gonna tell you, I think always the best way to discuss the funds and get the word out is on discussions like this. This is you can't put this in a 30-second commercial, right? You can't help people understand the dynamics of volatility and upside call spreads versus downside capture on a collar and alti. That's just stuff you can't even go into, right? This is a better open dialogue, and I think it's more informative. And quite frankly, don't believe us, right? People believe you more than they believe me as a portfolio manager, because there's that, that's the portfolio manager pitching his fund. People believe you more than they believe us, right? When you say something, they believe you. That's powerful.
Somewhat, if I'm not called a shill, right?
Look, welcome to the club, pal. You get a little garbage.
So, Mike, are your friends at CNBC, are they aware now what you're involved with, and are they going to start talking about YieldMax?
I guess we're about to find out. I did not tell anybody there until the press release went out. So they only became aware of it, within the last 90 minutes or so. So, your viewers are, among the first to know. That's for sure. I mean, I think YieldMax actually put out a press release a few hours ago. So that was the first public word of it, but I didn't share it with anybody. I don't think it's advisable generally. You know, the rule of the game in regulated Wall Street and probably in the media too is, you know, when in doubt, just leave it out. Don't bother to open up your mouth. So I didn't.
Exactly. All right. So a question, any thought on the bias? Well, I guess you can call it bias for brokers. You know, this came up on the panel the other day, right? Margin maintenance on YieldMax funds. Do you think there's bias at some brokers? I mean, I guess, do you have an opinion on margin maintenance and how that whole thing works on certain funds? Do you think, I don't know if you're aware of the various margin maintenance that the brokers.
Yeah, I mean, we hear about it, right?
Yeah.
Whether it's, you know, what Schwab holds it at, or Fidelity, or IB, or some of the other places, right? I mean, it's one of those things that there's only so much we could do. They have their own compliance and risk department, so they're going to make their own assessment. It's funny you bring this up. I know actually today, Scott called, actually was talking to Schwab about it, and you know, some of the pushback on some of the ones they hold at 100% maintenance was limited history, crypto based, low average daily volume on some of them. It just seems like their normal MO is to be more cautious out of the gate, and we'll see that evolve over time. So I think it's probably something that will eventually change. Certainly, brokers that move first to make, you know, maybe a more standard, you know, margin requirement are probably going to get more business. Like it's silly to me to think, wait, I'll let you buy Tesla, but then on Tesla, which has, you know, really lower volatility because of the call aspect to it, selling calls is going to be held at 100%. Like that doesn't jive for me. So it's probably just going to take a little time for them to continue to do it. But it is something that we reached out to all of our past people, right? My life and the former Schwab Ameritrade world and our former E-Trade friends. Like, you know, we talk to them, and it's a risk decision. Not too much we can press there.
You know, something I would just throw in there. I think it's important to recognize that, you know, brokers are not a monolith. It's not just one person who's making both a determination about what makes the most business sense, what customers want, and what is risky. You know, the risk departments do have something to say, and they should, by the way, about what, you know, people can trade or can't trade and how they're going to conduct their business. Anybody who has run a risk book at any financial institution has had to contend with this. You know, when we cleared our business at Goldman Sachs, you know, their risk department was all over us every day, it seemed like, in 1999, 2000, and 2001. It seemed like there was not a day I wasn't talking to them. During the GFC, and this is going to seem incredibly ironic to a lot of folks, when things first started to roll over, I never heard from the risk department. In 2009 or thereabouts, I heard from them every day. We had hired, I think, 250 people into Cantor from Bear Stearns, including their entire risk department, which I found hugely ironic. It's like, how is this possible that our risk department is now former Bear Stearns risk department? But those once burned, twice shy. These guys, I exchanged emails where a guy once said, "You're over your risk limit in deltas in GLD." And I had 137 too many shares by his work. I had 5 million VAR on. 5 million VAR, and I got an email about 137 shares of GLD. And I actually replied to him and CC'd the CEO of Cantor Fitzgerald. I said, just to be clear, you're asking me to sell 137 shares of GLD? We're just going to put that on the record because this is so ridiculous. But you have to understand, you know, risk guys, they have very little to win, you know, with adoption of new things. But they have a lot to lose if it goes wrong. And just like investors need to be educated, portfolio managers need to be educated, traders need to be, so too do risk people. And it's not their fault. They've got a lot of things to look at. So I think this is new. I think a lot of them are going to have to figure out what's going on. And when they do, it's going to be fine. It just takes a little time.
Definitely. Okay. Shout out to ETF Inspector, by the way. He's another YouTuber, Jay. I don't know if you saw him. He covers Ulti. So, and you know how Ulti is. But the protective puts on Ulti, by the way, like SMCI earnings, awful, right? It went, but Scott and them, they did a great job, basically protecting. I know it's a small portion of Ulti, but speaking of protective puts, what other funds are you able to do protective puts on perspective wise?
Yeah, it's a good question. So LFGY, GPTY, so Chippy, what is that one? CHPY, right? Those kind of style funds we can. So the baskets that aren't the target 12s can have puts on them. We've had puts in LFGY, by the way, on Bitcoin, on the Bitcoin index in the past. The market's closed, so I don't mind telling you this. You're going to see that we redid those puts in LFGY today, right? We rolled them up on that on the SIBO Bitcoin ETF index. So you'll see us from time to time adding those in. Ulti is deliberately finding volatile stocks, and we know the story there, right? Where you don't want to get your face ripped off because one or two tickers have a nasty earnings report. Whereas you look at some of the other ones like GPTY, it's designed to have exposure to that industry. I don't think it's a bad choice for us to, sprinkle in some protection from time to time. Quite frankly, wish we had puts on AI going into yesterday, right? Like that got smoked, put down 25%. Would have been great if we had, a long put or a collar on in that one. So we have the ability to do it in some, and we will do it from time to time. Ulti, it is more deliberate and almost part of the MO, but not always, right? Not always, right? There's some positions that we may leave unhedged. Like I think when we doubled up on the Coney position last week, we only hedged half of it because we had already had some gains, and it was like, okay, roll up that one half, right? So it'll depend, but those are like those baskets that aren't the targets. We have the ability to add hedges and actually do all kinds of things, right? Synthetics, spreads as replacement for stock, out of the money credit spreads, like out of the money put spreads if you're bullish but you want a buffer, like all of those tactics are available in Ulti.
Okay. So I guess Monday is the dividend call day, right? Which maybe Mike will be on. So Mike, do you understand the pressure involved with dividend call day, right? And the community's expectations?
I think there are two pressures, but I think the principal pressure is just to do the right thing, and then to help people manage their expectations. It isn't a vote. It's not a popularity contest.
Yeah.
Jay and the team are fiduciaries. I think that's the first and foremost important thing that everybody has to recognize. So they're the ones with the guardrails, and they're the ones that are going to try to do the best thing that they can. Obviously, it's phenomenal if the underlying performance supports both, what you can do and what people hope and expect. But ultimately, it's that first fiduciary responsibility that the PMs like Jay have to adhere to, and hopefully people are happy enough with that.
How can I get on that call? Is there
But you do all the math on your own, don't you have it? You nail it every time, no?
You haven't been listening to me though. I need to know what Palladium is.
Scott listens to you.
He does. Or
he lets you know if you say something out of turn.
I know. Yeah. That's good. All right. So before we close it out, all right, so this BMNR, did you file for BMNR? This is a ticker that keeps coming up. I think it has 160% IV right now. Is that a fund you filed for? And if not, do you plan on filing?
Yeah. So for those that don't, this is Tom Lee became a part of this firm, and he is going to follow kind of the Michael Saylor playbook with Ethereum. I remember it just scrolled by on the TV, right? It's scrolling all over the place right now. So it is, as soon as there were options on it, it found its way into Ulti and LFGY, if you might have noticed that.
Yeah.
As a standalone, the market cap's a little questionable. There's plenty of volume, no doubt about it, right? It's one of the top 100 stocks traded. So there's volume on it. I worry a little bit about the market cap. And let's say it's super successful, and all of a sudden you don't want to find yourself to be 15% of the outstanding, market cap in a fund, right? So, at 10, people definitely get a little nervous. So I think we have to give this a little more wait and see. I would tell you it is absolutely on the board, as that Venuto talks about, but the market cap makes me a little nervous. I think last I saw was like, well, it could be more now, but it was something like 4 or 5 billion. And that's a little
7 billion. I just took a look at it. 7 billion now. Yeah, and I mean, for those people who are watching, consider the size of Misty on a relative basis. Misty is almost as big as Bitmine Emergent is right now, right?
Yep.
So, to be able to, and look, there's issues of liquidity that are going to be considerations. You also may have, in some cases, sort of significant long-term holders. So the actual float in the underlying can be a limitation. That's not so much a limitation in terms of trading the underlying asset for a portfolio manager who's focused principally on trading options. But it does create liquidity considerations for the folks that make markets in these things in good size. And I have every expectation that this is going to be more than $10 billion in very short order, and probably much bigger. At the pace that it's growing, and just given the public interest in it. So, I imagine this is going to be on the radar of Jay and the team very, very soon. Okay,
in respect of time, we'll close it out. What I usually do in the closeout, I kind of give Jay or Scott, or whomever I'm interviewing, a chance to ask the community a question in case they want to go back and see, their opinions on something. So I'll ask you, Mike, did you have any particular question that you wanted to ask the YieldMax community in general, or is there maybe just something you want to just state to the YieldMax community, or I don't know, now's your...
I would say, rather than asking a question, I'm going to just offer that you can pose as many as you like to me. So feel free to reach out. I probably will be doing a couple live streams a week. I think that we'll probably be taking a decent number of questions from people in the community if you're interested in doing that. And that's pretty much it. I'm available, and I'm going to be looking for all of your questions. So we'll see how many of them you have. But
will you be looking
at? The more I learn about what people want to know, the more I can help.
Were you looking
at? I have
a
pretty thick skin too, so it's all right.
Yeah, the Reddit community has a lot of questions. I know that. I know sometimes people laugh at some of their questions, but no, it's a big community everywhere. And I appreciate your time, Mike. But Jay, any closeouts, any thoughts? Obviously, thank you, Jay and Mike, for giving us the time today to make this huge announcement. We appreciate you. But any final words before we close this out?
As always, I'll just say thank you to everybody. Certainly thank you for all the questions and the participation. I always chuckle when I read the comments. Thanks, guys, for keeping it real, as always. Appreciate
you guys in the comments.
I love it. So look, I hope everybody understands. Again, our just main goal here is Mike is here to help add firepower, add capacity, and we really, we just value everybody's input and engagement. So that's it. And like I said, I can't wait to talk more about Salty when we can. There you go.
All right. Yeah, it's going to be a fun time. No, if you guys want to hang on real quick before I end this stream, again, thanks again for your time. Thank you for the community for being here. 1,800 strong so far. Again, we're on YouTube and X, so it's a great community. Hopefully everyone behaves for you, Mike. But if
some won't, that's okay.
Yeah. send Scott after him, right? But all right, again, guys, thank you for your time, and thank you to the community, and feel free to ask any comments later on for the community that's watching after. I'm sure Jay and Mike will be watching, but I'm going to close it out here, and thanks again.
Thanks.
Trade well, everybody.